Hi everyone, my name is Amanda and welcome to my channel RN to Realty. So, as you might have guessed, or maybe not, I am a registered nurse and I am very much interested in the world of real estate. So, this is essentially my way of chronicling what I'm going through. Hopefully, it'll be helpful to everybody else. If you have questions, suggestions, please feel free to comment below and subscribe. So, today, I would like to talk about something that very many people who are just getting into, whether it's purchasing your first home, your first duplex, something that you might not know, um, specifically the details of a mortgage. Now, when a person thinks about a mortgage, they think about just one payment, which is essentially it. However, a mortgage payment involves three different things. The first thing is principal and interest, which is technically one thing, but it's two very important parts in one. So I'll go into details about that in a little bit. The second part is home insurance, and then the third part is our taxes. So when I was going through the process of getting a mortgage, um, I was explained this, but it didn't make sense until I actually saw my first mortgage statement. So hopefully it will be helpful to you all. Um, just so you know, I purchased my first duplex recently. Um, I closed on it the end of this past August of 2018. Excuse me, August of 2018. And I'm learning the ropes of being a homeowner, um, and things of that nature. So I'm hoping you all will learn from me and I can help you all out as well. So the first thing the first thing I'm going to show you is my closing disclosure, which essentially is right before you're going to close on your home or your duplex or whichever type of property you're getting. Your mortgage lender will send you a closing disclosure or a CD specifying. Initially, you'll get one, like in the beginning, which will give you an estimate as to how much things will cost. Excuse me, you'll receive an estimate as to how much things will cost. Um, and like within that week, right before you close, you will get a final closing disclosure detailing what you will be paying specifically. Um, so with mine, my mortgage was a 30-year mortgage at a fixed rate, and I have a conventional loan. Hopefully you can follow my cursor here on the side. Excuse me. My loan amount was $112,000 and $112,500. Excuse me. Um, my interest rate was 5.375%, and my monthly principal and interest is rather $629.97. So remember initially when I was talking to you about my principal and interest. So the principal and interest, you have the principal, which is your loan, and then you have the interest, which accrues. So let me switch over to my first mortgage statement. So remember how I told you initially my mortgage payment, no, my loan amount was $112,500. So you notice here $112,373.94 is what I owe to the bank after I made my first mortgage payment of $1,099.30. So let's go to the far right at the bottom. My principal, $126.63. So out of the total $1,099.30 that I paid for my mortgage, only $126.63 actually went towards paying my loan. Again, it was $112,500. The interest, follow my cursor, that I paid was $503.34. So you'll notice that it seems like you're only paying bits and pieces. A lot of individuals, are only able to pay that amount, that total amount up here, once for the month. Now, if you are the type of person who wants to get your mortgage paid down very fast, then it is very important for you to pay your mortgage at least twice a month. And I want to make sure I get the terms correct. Whenever you make an extra payment towards your um, mortgage, you want to say for instance, like this month I paid $1,099.30. That goes to everything we talked about: principal, interest, taxes, and home insurance. But say in 2 weeks I send $500 extra, I'm going to put that specifically towards the principal, which will bring the $112,373 down to, let me do my math here. 1, 2, 3, 7, 3 minus 500. It will bring it down to $111,873. So over the life of the loan, if I keep doing this, I should be able, not should, will be able to pay down my loan faster. So just to show you a little bit, it just tells you how much I paid last month and how much I paid year to date. Okay, so the next portion that I wanted to talk about, let's go back to my final CD. So the mortgage insurance, this was, I forget why it's not shown here, but actually, no, I remember why. Mortgage insurance. So I don't know if you remember hearing the term PMI. That is mortgage insurance. Now, I didn't have to pay it because of the type of loan that I chose. I chose to use a conventional loan. And I actually chose to buy out my mortgage insurance so that way I wouldn't have to have an extra, I forget how much it was, like $50 or $100 a month. But I paid, I believe, about like $900 something so I wouldn't have to pay for the mortgage insurance. And I'll talk about that a little bit in another video. Let's see. Now, so it's principal, interest, which is one thing we discussed. The second thing on the mortgage insurance under your mortgage is homeowners insurance. Now, the majority of lenders require that you have homeowners insurance prior to them giving you a loan. So my homeowners insurance is a little pricey because it's an older home, and after having my 4-point done, said that I needed some electrical work, which I plan on doing, and an updated roof. So I had to essentially pay more to make sure the home is covered. And that's why my insurance is so high. So my insurance is $469 minus $214. $255 is what my homeowner's insurance is a month. So the rest of the $469 is $214. So the $214 makes up my taxes that I have to pay every month. So it depends on where you live. It depends on what type of property it is. The tax also depends on if it's your primary residence or just an income property. So fortunately for me, it's a primary residence and an income property at the same time for me because I live on one side and rent on the other side. And so I will file for homestead exemption, which will lower my property taxes next year. So not technically, but my mortgage payments should be lower next year. So I'm very excited about that. So I'm hoping I'm not confusing you too much. If you guys want any clarification, please message me in the comments below. And hopefully that answered some of your questions, if you had any questions at all. But I just know for me specifically, until I saw what my first mortgage statement was, I really and truly did not understand why people said, or why people take 30 years to pay off a loan. And just to reiterate, it's because the majority of your money that you're paying for the mortgage each month is going towards homeowners insurance, taxes, and interest. So definitely, if you are able to put an extra $100, $200, $50 towards that principal within the same month that you pay your mortgage payment, do so, because it will make a huge difference.